Good afternoon, guys. Today is Thursday, the 31st of December. It is the last trading day of the year. This will be the last video until next year. And so what we're going to look at today is the broad market, a few different charts, just to get our overall sense of what happened this year, where we are at, what we have to look forward to. We're also going to look at three different companies. I want to look at Boeing. I'm going to look at FUBO, which is FUBO, and I'm not sure if I'm saying that right. And the last one I want to look at is RKT. Welcome. This is Patrick, and you're trading with Prime. What we're looking at right now is the SPX. Normally, I would be looking at the SPY, but I have so many different drawings on that chart, so bear with me. What we're looking at primarily on what we have here are these four lines or five lines on the screen. These are actually the presidential elections, and so at the time period when we were looking at the most recent one, the Trump going into Biden election night and not necessarily inauguration, but that's what those lines are. The vertical lines are. These boxes that we see, the purple boxes that we see going up the screen, that is the consolidation periods, or what I've kind of highlighted or identified as consolidation periods. Some of them are way bigger than others. Like this one back here, it spans a decade, another decade, and then you have a few years in here, and then another decade, and then you have this decade-long run-up. So spanning all the way back to the first one goes from 1928 all the way to 1954. So a decade, 3 decades of trading. Now this is the monthly time frame. And so I don't know, this is the thing, is that I was kind of eyeballing this, like you see this period back here, consolidation. And what strikes me is, I don't know, I'm a little bit skeptical because of where we're at, and because we know what the political, the geopolitical, the fundamental reasons, the economy, where the economy really is and where the market is are two separate things. And so what I'm kind of looking at is it possible, I'm just going to throw this idea out there. I can't even believe I'm saying this, but I have to be open-minded about this, right? So is it possible, bigger picture, longer term perspective, that this purple area that I just highlighted is a consolidation period, and we are going to continue rallying on up to 10,000. That we will see. We'll see what happens. But it's something that we have to really take into account, that, you know what, the market on the bigger picture perspective, so if you are, for your long-term accounts, is continuously going up, right? And that's where the funny saying, stocks only go up kind of saying comes from. Another thing we have to kind of keep in mind is if I go to the yearly chart, there's something else I saw in here, and we'll look at a few different charts just so we can kind of see. Notice this most current year, which is this hammer doji candle. I don't want to call it a doji. This hammer candle, where price came all the way back down here to this 2140 level, and then it came all the way back up here. It closed the month and the year all the way at the highs, 3760. To me, that is extremely bullish. I can't look at that and say that it's bearish in any way, shape, or form. What we do know is we do see back here where price comes out of these consolidation periods. It either back tests, which maybe we'll see a back test, but it back tests and then it rallies. It pops through the consolidation period and it does it again, and then it does it again. Another thing to kind of keep in mind is that maybe what will happen for the next 10 years is we'll see sideways action, just like we saw in this period back here. Just like we saw this few decades back here, in this a couple decades in this area. You see this consolidation period go on for quite a while. Now in that consolidation period, it's quite the range, because like this one back here, you have a 76% to the upside, minus 42% to the downside. So that's quite a range for us swing traders. We like to capture that range, and so time will tell. What we're looking for now is some sort of reversal type of a candle, not necessarily on the yearly chart, but we're looking for a reversal candle on the weekly time frame or the monthly even. And to be honest, it could start with the hourly and the daily, so that's also something to keep in mind. This is the weekly chart, and so now we're really kind of zoomed in here, and we kind of see this here where we see this broadening, what people are calling this a megaphone pattern. That is one other aspect I wanted to dive into a little bit. I I don't want to say I'm more bearish than I'm bullish, but I'm very skeptical of this market and what the market's prices are currently. And so I don't know. Part of me feels like, yes, I know what the bigger picture is looking like, but let's get real here. Where the market at is a little bit disconnected with reality. Do I think that prices are a little bit overextended? Do I think that this rally has gone too far? The answer to all those is yes, I do. I think it's too far. I think it's getting a little ahead of itself. But at the same time, I have to be mindful of where the signs of you know, this is definitely bullish or this is definitely bearish. It's hard to look at this and say that it's bearish. Do I think it's extended? Yes, I think it's extended. I believe that it's probable that we get a pullback in here, at least a pullback to 35.25 on the SPX. So we'll go to look at the Qs and IWM and the transports here in a second. But this continues to be a bullish market. And the reason why I wanted to show you the bigger picture is that we have to kind of realize, like, this could go on for quite a while. So if this is a breakout like we saw back here, and I'm going to zoom in on this area right here. And as you can see, this from the low back here, this is 2010. From the low to the breakout was up 45%. We have to look at where the SPX is right now from the low of March up to the current price. But let's say we are breaking out here. This back here was up 45%, and then it continued to rally on up for the next 10 years. So that was the longest, or is the longest bull market. We have to kind of look at what price is doing. So right here, just kind of looking at this chart, we had this kind of breakout, trade sideways. It did come and back test. And so maybe we could identify throughout the weeks and the days what it would look like to capture the back test. And this back test was only 7%, and then it turned around and then just took off and never looked back. So if I go back to here's the bigger picture. It took off here, and then it actually went all the way up to 21.26, and then had a 14 to 15% drawdown. I'm looking for something similar. I'm looking for anything between 5% and 15% before I do any kind of adding to my long-term positions. That's what I would be looking for. And this is the consolidation period I was talking about. So if I drew a box in here just kind of like this, I mean, I don't know, maybe the back test already happened. Maybe it already broke out. Here's the previous high of beginning of the year of in January and February. Maybe it did break out, found resistance, pulled back, it back tested twice, and now it's taking off. That's both of those scenarios are something that we have to be mindful of. And I'm not trying to say that, and this is the thing with stock market, we can't just like predict what's going to happen. We have to play the chart as we see it, and it's all dynamic. It happens right in front of our eyes, and we have to act fast. But bigger picture perspective, stocks only go up. So let's look at the Qs. Same kind of scenario I see in the Qs. This, of course, is the weekly time frame. Are we extended? Yeah, I believe we're pretty extended. We're actually, if I dive down into lower time frames, which I'm not going to do today, but this does look like a rising wedge type pattern. Can that play out? Can it break out? And both of those questions, both of those answered yes. It can do both. But do I want to add to any kind of long-term positions currently? And no, I don't. Yearly chart, this is the yearly. Does not look bearish in any shape, in any way, shape, or form does this look bearish. Are we getting extended from the, and this is the yearly chart, so this would be the yearly moving averages. Are we a little extended? Probably, definitely extended. Do I think that we'll have some sort of back test? It's highly probable. We usually see these kind of severe moves back here I believe this is the dot-com bubble back here. The dot-com bubble saw minus 83%. Now let's go to the 2008 financial crisis. We saw a pullback of 53%. Do I think it's possible or highly likely we see a pullback? Yes, 50%, 40%, even 10%. Yeah, I do think that we're going to pull back here at some point. It's trying to narrow down that at what point do I think that that's going to happen. Again, weekly time frame. I could draw these boxes in here again where you see these consolidation period. You could even call this consolidation. In fact, you could say this. I know it's a pretty wide range in here. I don't want to say that, but you could consider that a consolidation. Is this current price action consolidation? It could be consolidation. So these are pretty wide ranges. Do I want to be a buyer at these prices? I don't currently want to be a buyer just yet. IWM, same thing. Let's look at the yearly chart. This is the max on the yearly, and so we see the kind of same thing. You see the dot-com bubble pullback of 37%. The financial crisis pullback, well, from the high anyway, which was in 07, all the way down to the bottom of in 09, you had a negative 59 to 60% drawdown. And then this is what's interesting. We had, let's just say the highs from earlier, let's say it's from 2018, because the IWM kind of traded sideways for a few years, but it had a drawdown of 44 to 45%. And coincidentally enough, and this is why I love technical analysis, and of course this is looking in the rearview mirror. You can't really say that, you know, oh, I would have been a buyer right there. It's very hard, especially when we're in the middle of the coronavirus crash, to step in and be buyers. But it clearly back tested a previous breakout area, and it went down and back tested the previous back test. So definitely a buying area. Do I think we'll get down to that price area again? I don't want to say that we will be down at around $94. I can't even begin to fathom that. But then again, it's also what people were thinking when the price was down at $94. They couldn't fathom the price being up here at $200 a share. So that's definitely something to consider. Is this candle, the most recent, this past year's candle, is that bullish or bearish? That definitely looks like a bullish candle. That would normally lead to higher prices. And if I go to a monthly time frame, same thing. We broke out. Remember, we broke out on a monthly time frame last month, and we talked about this. Higher prices are more likely. I can't believe it, but that's what the chart is saying. The chart is saying higher prices. Also, we could look, this is the consolidation period. We could say that this whole thing is consolidation. Now, would you want to be a holder through that minus 40%? That's a pretty wide ranging consolidation. I normally like to look at consolidation when it's something like this, where it broke down out of consolidation, or something even maybe like this, where it's a little bit tighter of a range. This is pretty wide in my opinion, but we'll see what happens. I do think that we'll eventually get a pullback, at least to come back test. The question remains, how many months away is that? How many weeks away is that? Let's go to the Dow Jones Transports. Dow Jones Transports, same kind of chart. I'm not going to go through the whole thing just to save time, but let's look at the yearly time frame. Again, extremely bullish candle on the yearly chart, and here's another extremely bullish candle. And in perspective, this feels really, really, really high on the chart. But if I do this, right? Oh, let's do this. Let's start over there. If I do something like this, you see the same kind of bullish candle. I'll highlight it right here. Yeah, it would have been nice to see the close higher, but it wasn't. The close was lower. But the point is that prices ended up all the way down to $13.20, and then the bulls pushed it all the way back up here to, bulls pushed all the way back up here to the $25 price range. And then you saw a pullback. So from the low to the high, it ran all the way up here, 397%. Imagine the way traders were feeling back then, right? 397%. And then you had a pullback. And then you had a pullback from this area, 65. You had a pullback all over, minus 70% drawdown, back down to $19. Oh, I got to check the scaling on that. That might be the wrong scale. Anyway, so nonetheless, you kind of see these retests, and then the price will just continue rallying here. So let me do this. This is back on. Now it can kind of feel like, so this price area back here, this is what the traders were feeling back then. Imagine coming out of this. And this was back in the the 40s. So if we fast forward all the way up into the 70s, same thing. You see this kind of reversal candle. You see the back test. It rallies, breaks out of consolidation, and it does it over and over and over again. And here, same thing happened. You see this consolidation period right here, and then price broke out of that, and then it came back to do the back test. Here's a consolidation period here. Price comes all the way down and back tests the bottom. Normally, I like to see the back test on the top of the breakout area up here, but that's not what happened. It went all the way back down to the bottom of the consolidation area, and then it ended up breaking out bullishness on the year. So that's the yearly time frame. Let's go to the monthly. Monthly is just this, this uptrend. We could just keep seeing this nonstop uptrend. And now the hips and flows and the valleys, you can kind of see it a lot more clear on these lower time frames. So this is, monthly is relative because we like to trade the daily and the hourly and the 5-minute charts. But you still see it's still, a chart is a chart. It really doesn't matter. You still see the same kind of behavior during the different time frames. So that's the transports. Let's look at the, did we see the SMH? I don't know if we said we'd look at this one or not. Again, monthly chart, extremely bullish. Do I think eventually it will pull back? Yes, I believe that it'll pull back. It's more of a matter of how much do I think the pullback will be. It's really nothing on this chart. 33% drawdown, 30%, and even a 20%. Just looking at the chart, it would feel like a lot at the time, but it's relative to how much it's ran over the last several years. You know, from the 2008 dump, and even back then we saw a 68% drawdown, and then price broke out. But you just kind of keep seeing the same thing over and over again. Was that the last one we wanted to look at? The Qs, the SPX, IWM. I think that is. I think we'll wrap it up there just so we can get into the charts. I got a couple of requests. Let's look at, first we'll look at Boeing. And we're not going to look at the larger picture, although that looks pretty good. It looks pretty good. We saw a back test and now it's rallying up, and it closed the year back up here above $211.20. Let's go down to let's look at the daily chart. So, and I want to look at Boeing because we took a trade in it, and I was actually stopped out of the trade. I was expecting higher prices based on the candle yesterday. I don't know. Let's kind of dive in here and like see what we can find. I think it's okay to be long against this 211.20, and that's the last breakout area. If I drew a trend line in here, which it's kind of hard to see on this chart, but if I went down to the hourly, you would see it where it broke out of this area. You saw the consolidation period back here. It broke out of there. It came and back tested once. I'm wondering if this price is going to it might come all the way down here and back test again. But if it did, it would take out the low of this candle right here. And this candle, the low of that candle is what I would be long against. So price if it closed the day below 211.20, stopped out of the trade. But at this point, if you are long, it's okay. You have two moving averages in here. You have the low of this candle in here, and you also have this down sloping trend line support. You have a lot of support areas in this price range. If I go down to the hourly chart, and you can kind of see what I was looking at. Let's do this. And by the way, I changed the color of the background to white, so let me know if that works better for you guys, if you can see the chart a little bit more clear. So even this, looking at the hourly time frame, now you can really see it in perspective, and so it kind of just makes sense now. You see this, you see where price really had a hard time getting through this area. It broke out, it fell back through, it found support, and it almost made a bull flag breaking out, consolidation breakout again. And now what I'm looking at currently, and I'll change the color of this, I'm looking at this area right in here. Several things going on here. You have this down sloping trend line. You could almost do one of these, and then you have this horizontal support in here, right, where it's back tested once, it's back tested twice, and now maybe it's doing a bear flag. Currently, the last few hours of the day, it's doing a bear flag. Maybe it'll fall down to this 211. There is a very good trade out of this whole picture that we see on the chart right now. And what I'm going to do now is I'm going to just do something else and maybe make it a little bit more clear for you guys. I think the highest probability trade setup in Boeing right now currently, if you're not going long against this 211.20 price area, I think a really good idea would be to wait for the actual breakout. This is probably the highest probability trade setup, is wait for that breakout, possibly the back test, and then going long in this price area right here, wherever that price area is. Go long in this price area right here with a stop below the breakout, or even back below this price area down here around 215. That's Boeing. Let's go over to RKT. And feel free to leave a comment under the video if you have any questions about Boeing, RKT, or the next one we'll go into FUBO. RKT, so this one's pretty simple trade setup. It got a little concerning today because we closed right on trend, but this is what I was looking at. This is the pattern I'm looking at. Again, the highest probability trade setup in this picture is, again, to wait for the breakout, back test, and wait for the resumption and going long. You could even go long on the actual back test, or you could go long at this support area down here. But keep in mind, let me clear the screen up like this. Let me zoom in just a little bit more. The problem with this is today's close was very ugly. I would not be surprised if we took this trend line out. Here's the trend line. And another thing is some people might draw the trend like this, which is okay. And this is another way we want to be mindful of this, actually, because it's another way to look at the chart, and we want to see both sides of it. Some traders are looking at this like it already broke down and now it's back testing, and now it's resuming to the downside. That 100% can be true. What I'll say is this, is if price, there's two different areas that we want to see price to get stopped out of the RKT trade. We want to see price convincingly close below. We want to give it a little bit of room, but we also don't want to be bag holders. So we want to close it if it gets below this price area. Don't give you an actual price. The first one is around $20. Let's call it $20 even, right? That's the first price area, $19.99. So the price closes a day below that price level, we could close the trade. The other price area I want to be mindful of is this one back here, because this can also be support. I'll give you a price on that. The next area of possible support is around $19.62. But I'll say this last thing about it is if it closes below that, even further prices to the downside, all the way back down, possibly even to $18.20 or all the way down here to $17.82. I hope that clears up RKT. But again, the highest probability trade setup is waiting for a breakout. If you are not patient, you can go long against these price areas down here. That's RKT. One last trade, and then we will wrap up this video. Feel free to like the video if you guys gain value. Also, rtbtrading.com 1 week trial. We might have extended that trial period. I believe it's longer than a week now. We might have extended it for a little bit, but check it out. Trading community, trade alerts, option alerts, spread alerts, and wonderful people. So check it out if you guys get a chance. So here's the thing with FUBO. I might have been saying it wrong the whole time. It actually wasn't until today that I realized what this company is, because in my viewpoint, I'm not long-term trading this company. I don't really care what they do. So whenever I see the name of a company, I don't even care. It doesn't matter to me. What I see on this chart, unless I'm a long-term holder, if I'm a long-term investor, I'm not looking to put a ring on FUBO's finger. But today I actually looked up what the company does. It looks pretty cool. I mean, I'm pretty sure it's streaming different stuff, sports and things like that. So looking at this chart though, what I first look at is this pump. Now maybe this is a pump and a dump, which right now that's what it looks like. But this price action isn't a pump. So far has not been a pump and dump ever since it left this price area of $10.87. I could say the same thing about this chart as I could say it about a lot of other charts. I could name 50 companies right now in the S&P 500 that look exactly like this. In fact, let's go look at DKNG. Chart did the same exact thing. It doesn't look like it now, but what do you think all the traders were saying when at this part right here? What were they saying? And then we were going long when? We were going long in this area when we were saying price isn't just going to fall right through this previous consolidation area, and this is the previous consolidation area. I know it's a wide range, but you could tighten it up a little bit. We were going long. So I know that it's really hard to envision it right now. This was a sell-off. This drawdown was 45%. Now let's go back and look at, for all the reasons under the sun, let's go back and look at FUBO. Now, there is something to be said about the significance in the fall here, but there's also something to be said about the significance in the 130% that it ran in a matter of 1, 2, 3, 4, 5 days. In a matter of a week, it ran 130%. It's like a rubber band. So when things get this overly extended, it's going to snap back. The difference is with FUBO, whether it was I believe there was like a 70 million or 70, whatever it was, there was shares being offered or whatever the case is, whatever the story behind it is. In my opinion, it's like we always see that every company does this, and all the traders as it's selling off, it's a very scary thing to catch a falling knife. And don't get me wrong, we don't want to catch the falling knife. The thing is if we're in this company up here, let's say we entered this around, we thought this was a reversal candle. Let me do this. We thought these were two reversal candles up here, and we said, you know what, I'm willing to go long here. I see some buyers stepping in, and it's on heavy volume, so it's at support. You have this moving average support. You have the support back here. This candle back here. There's a gap fill in here, and so there's a lot of support in there. The thing is when it closed hourly below that price area, you should have been stopped out of the trade. So there is something to be said for people who are trying to catch the falling knife. It is a falling knife, so we have to be careful of that, because to be honest with you, the company could be trash and it could just keep selling. That's absolutely true. So be mindful of your money and be careful on when you're trying to step into these trades. Be very careful of that because you don't want to waste your money. We're out of the trade. We tried to go long again. We're planning on this being support, and we're gonna catch the knife at this support level. There's a lot of reasons. Maybe you found some trend lines in here, and there's a lot of convincing evidence that it was a good buying opportunity. Another way to do it is to, let me go down to the hourly time frame. Another way to look at this is this. This is, to me, I right off the bat, the first few things that I see is I see prior consolidation, and I could do this. It's because of the momentum and how fast we have fallen down into this price area. I believe that this area in here is a very good buying opportunity. But that also means if we start selling below my stop loss zones, whether that was up here at $28.40 or $26.93, if we start closing daily or hourly below this area, which is below this area here, below the consolidation, I'm not going to stay in the trade. I'm going to be out of this trade. And that's the way I look at this. I combine that with the volume, right? When you started seeing this run up, you start seeing this massive volume step in. This is institutions selling into this strength, right? This is traders buying. This is short covering. This is a squeeze. Excuse me. And then you see the rollover, and then you start seeing all the retail traders selling off because institutions aren't holding. Well, maybe there are some that are holding this, but the big boys are selling into this strength. They were buying back here. They were buying back here, and the prior run-ups before this massive consolidation. They're not buying this going on the way down. Something that I noticed today, the last several days, you start seeing this volume really pick up the last several days. Now, this could be capitulation. In fact, it's the way I'm looking at this is it is capitulation so far, but that remains to be seen. It could still be selling, but we're slowing down. Momentum is slowing down. So there's a few different reasons why. So volume was one of them. Volume is picking back up. That remains to be seen. We don't know which way it's going to go necessarily. It could go either way. We also have a drawdown of 55%, or I forget what it is on the daily chart, but it's around 60% drawdown. If I do this and I widen the screen a little bit, there you go. Now you can kind of see this price action. Now, right here, I want you guys to kind of focus in on this. You see this it was an old consolidation period, and price started selling off down below here. It created somewhat of a bullish pennant or a bull flag or a bullish consolidation. However you want to look at it, it's bullish. Once it broke trend, it really broke out. And if you really zoom in here, which I won't do, but if you really look at this, the volume on the breakout, it's the volume on these next 2 days of breakout areas, the volume really picked up. So to me, it's more probable that this is going to be more institutional buying in the same volume, just looking at volume. Okay, so that was another reason. Plus, this was a former breakout area. That's why I have a price over here of $26.93. And then I have another price of $28.40. Both of these zones in here, to me, this is a buying zone. As close to risk as you'll possibly get. If you want to know my opinion on the highest probability trade setup, like all of the charts that we've just looked at, the highest probability trade setup, if you want to be conservative, is to let price do this. What's going to happen next is it might sell down a little bit, or it will rally. Either way, price is going to do this. Price is going to start doing this consolidation. And then you could draw a trend line going across the peaks and then say, you know what, we're willing to be buyers once it breaks out of that consolidation. That's what people have been doing in Tesla. That's the highest probability trade setup. And this video is getting really long. So that we see that in Tesla over and over and over again, right? You see these consolidation periods, consolidation, bullish consolidation, bullish consolidation. This is, I don't know what this is turning into. This was bullish consolidation. It just broke out recently. Maybe I could do that. And so you just keep seeing this pattern over and over again. I mean, maybe this will turn into a wedge. Who knows? Maybe there's a wedge in here. Anyway, so that's the thing is we see these bullish consolidation patterns, and maybe that's what this next company, FUBO, will turn into. Just something to keep on the radar. I know this is getting really long, so we're going to end it here. Just be mindful of this. As far as some upside targets go, If we do break through here, I would first be eyeing these moving averages on the hourly chart. But in fact, I would rather go to the daily chart and say this. If we can break out of the current price, I think we'd first target this price area of $30.74. Again, we're not looking to marry it. We're looking to just ride the wave on the bounce play, whether it's a dead cat bounce, who knows what it'll turn into. But first area is $30.65, and then 33.38, and then up here at this consolidation period, just like on the way down, we'll see the same thing going on the way up. If we zoom in here just a little bit, we could look at this as consolidation in here. So same kind of quote unquote rules would apply. I would not expect price to just rocket right through this consolidation area without having some sort of pullback first and then taking off. So we'll see what happens. Anyway, thank you guys for your time. Happy New Year. Have a wonderful, safe weekend, and we will see you guys in the next video.